uh, it's a very important concept just introducing. Is there already. This in the managing portfolio, right? Specifically, you're talking about the stock market portfolio, right? Equity portfolio. There is always keep a core portfolio, right? What is a core portfolio? Typically, these are the companies which you own and in your portfolio is there. They are the stable companies are compounders, right? Long period of time, and then a mega trend, right? Therefore, keep those companies as a core for long period of time and keep a good size, right? Maybe start from 30% to 60 or 70%, right? That is your core portfolio where it should be focusing, and they are they might be growing faster, slower, whatever, but they're stable, and this clearly we see value in that. And these are the build a core portfolio, focus on this. That is should be our focus, right? Because I'll tell you, first, portfolio creation is very important job, and that when we're discussing now is core portfolio is the businesses which are in the mega trend and value base, and they're going to grow consistently over a period of time, and they are going to give us a real wealth as you go, because compounding works in that way. A satellite portfolio is comes to be. Satellite is what around the core portfolio you might have multiple strategies, right, running around the core portfolio which are satellite. You can divide that money again in multiple. First division you do in core portfolio, as I said, 30 maybe 40% to 70%, and remaining you can do divide in the satellite portfolios in multiple strategy wise. Then what is a satellite portfolio? Satellite portfolio are the stocks which are you want to buy based on the some want to trade them, right, based on fact as well value base, maybe specific industry, right? Currently if you ask me is energy and data center etc is going on, or sometime again cyclically it happens in the metal, right? Those we can divide your capital in those companies, but multiple companies you can divide it again based on the strategy also, which you talk about value migration or trigger based investing, right? Those companies also you can divide it. They may give you profit once a while, but but again the risk profile changes. That's why shown in different colors, right? They maybe you can divide it. But these are the good companies, maybe in terms of giving a one-time profit, may not be consistently. If there something is giving consistently and growing, try to keep in that add in the core portfolio. Therefore, divide your portfolio in the two main segment: is the core portfolio, which is the main, which is for long period of time, and satellite portfolio, which is you want to trade based on some strategies or based on the market cycle, like metal etc. There, what is trending happening, but this opportunity, satellite portfolio opportunities, maybe there for a short period of time, maybe couple of months to couple of quarters, or maybe 1 or 2 years also. But they're not in the mega trend, right, or consistent. If that is this, try to put in the core. Therefore, look at today. We'll take this exercise as which are the portfolio companies which you bought it for long period of time, right? And which you want to trade or just try karna hai, or something is very trendy or very value based, I'm getting really value, then only buying, but company is not great, right? Because one time profit. Just divide it and understand which category your portfolio stocks are there. Accordingly, you define. Don't do ad hocly, because portfolio, I tell you, aggregate portfolio is actually a gain, right? Because I see a lot of people just say, suppose someone has a 1 crore portfolio, they say, I doubled the money, right? How much money? So when I answer that question, they say, I have some 50,000 rupees, I make a 1 lakh rupees. As compared to 1 crore rupees, 50,000, 1 lakh rupees doesn't move needle, right? It's very little, right? Therefore, construct your portfolio very well. Understand division, core portfolio, satellite portfolio, and I see a lot of people also have become dead stocks. Try to clean up. That was the opportunity. Last month we were discussing almost a couple of times. We discussed managing capital gain tax, how harvesting you should be doing it. That was a good time for you to adjust the taxation. Even if loss is there, you save your taxes definitely. That we discuss. What you are discussing today is divide your portfolio very well, and core and satellite, and see which companies which you want to keep for short term, long term, and so forth. That will give you very well visibility, whatever strategy you are following, and where you will be after 6 months, 1 year, 2 years, 5 years. That kind of visibility come into picture, rather than just doing some ad hocly buying something, capital allocation also. and always try to our agenda as such, right? Increase the size of the core portfolio as much as possible. Whatever the trading money is coming into profit coming into after satellite portfolio selling, stocks should be added in the core or buying more satellite based on again capital allocation we are doing between core and satellite portfolio. But ultimately keep agenda as how you can increase the size of the core portfolio as you go forward, right? Not necessarily it will happen 1 year, 1 month or 2 months or 6 months. It happens, but keep that as a target, right? Because ultimately you're going to make money in the long period of time in the core. So, therefore, today I just want to touch upon this concept of our use core portfolio and satellite portfolio, how to manage that and for which portfolio we've been there. Just you tonight you just go back and check your portfolio, which are you want to consider them as a core, which are for short period of time, and so forth, right? Okay, Debash is asking, core portfolio it's a portfolio, right? Debash, core portfolio, of course, it should not be single stock, typically, not necessarily, but typically should. If you more, maybe typically if you ask me, it should be core portfolio stocks should be around 8 to 10 number. That's a good number. They are they should be very core. Again, it's based on capital, how much size you have. Satellite portfolio maybe again 7, 8 or in that range only. Therefore, by combining both should become 50 to 20 stocks maximum. Because as a humanly you can track those companies and understand, right? And that is I'm using again this core portfolio, satellite portfolio concept specifically for equity investment. But actually the same thing can go in wealth management also. Suppose you have something, of course, stock equity is a main core for our investment. But if you have some real estate, some gold, or some other asset class you have, that you can also put in the core, which are the long term, if you want to, put it. Or satellite, maybe just something you have bought it for some time, want to sell it off, right? This was satellite. This concept can be extended not only for equity investment, can be extended to the wealth portfolio, overall your portfolio, which includes everything, right? Therefore, but target keep it first. Go and analyze your portfolio, which are a core portfolio, which is a satellite portfolio. First, decide the division, right? And if someone is very aggressive, again, it's again a lot of factors comes into picture. You can keep the core portfolio small and you can trade more and more based on the again valuation. But if someone want more stability or to go, can keep 60 or % and so forth in the core. And but ultimately the aim should be the satellite portfolio, whatever the companies you have, you should be buying and selling and making profit and adding more and more in the core portfolio, right? Therefore, you should be expanding the core portfolio size as you go forward, and the compounding works there beautifully, right? That should be target. And of course, there can be multiple stocks, multiple industries, and so forth. Because I'll tell you, value investing is is not related to any industry, short term, mid term, long term. It can be played in different categories, any industries, right? Metal, cyclical businesses, and so forth, and short term, mid term, long term. That's what we touched upon last week. Because that is the beauty of the value investing. It can be done in multiple formats. Because it's everything, right? Because we need, as a human also, we have multiple needs. We look at the value different way. In the stock market also, you can opportunities are always there, right? Just you want to, how do you look at, pursue them, and take the advantage of it. That's whole game into picture. That's why how consistently you are learning, taking action, and adjusting portfolio and being remaining on top of your portfolio. That matters, right? This want to please go and check it out. This think on today, understand this concept, and check it out your portfolio tonight and see how division is there, and go forward. As I say, try to keep always core portfolio expansion, right? Let it happen in the next 6 months, 1 year, 2 years, 3 years, but keep that as a goal. Continuously increase the core portfolio, where you allow your capital to compound. Remember this very important concept to manage overall portfolio.